Avantis is a new asset management firm created by former Dimensional Fund Advisors employees. Here we'll review 9 Avantis ETFs for targeted low-cost factor exposure. Avantis Investors is the new kid on the block, but don't think that means they lack experience or that they're in any way a suboptimal fund provider. Avantis was started by a few people who left Dimensional Fund Advisors, considered the gold standard for factor funds. As such, Avantis shares Dimensional DNA, which is a good thing. Like DFA, Avantis provide relatively affordable but extremely reliable and appreciable factor exposure, specifically for size, value, and profitability. Just like Dimensional, Avantis draws on the most robust academic research in finance, combined with expert implementation to overweight drivers of returns that we would expect to both beat the market and conveniently mitigate portfolio risk over the long term. As a result, investors get the benefits of low-cost diversified index investing and purposefully targeted factor investing in one vehicle. Avantis is arguably the first firm to bring these sorts of sophisticated methodologies to retail investors with an affordable price tag. Chief Investment Officer Eduardo Repetto, who spent nearly 2 decades at DFA and was their co-CEO, said, "Our experience has shown us that investors are looking for reliable, diversified strategies that can add value over indexes and are cost-effective. That's what we plan to build." Avantis is also backed by the well-known asset manager American Century Investments. Now we'll review the most popular Avantis ETFs. First is AVUS, the Avantis US Equity ETF. As the name suggests, AVUS aims to provide broad US market exposure with an active light factor tilt towards stocks with strong profitability metrics, just profitability, and a lower relative price, which is value. It also has a very small positive loading on size, so its average market cap is lower than that of the market. Think basically a US stock market index fund that we would expect to beat the market and have lower volatility and risk over the long term based on the best academic research. In its extremely short lifespan thus far, since January 2020, AVUS has outperformed the S&P 500 index. Hopefully the value premium is making a resurgence. Morningstar even named this fund their favorite new launch of the year in 2019. AVUS has nearly $1 billion in assets, over 2,000 holdings, and an expense ratio of 0.15%. The second broad core ETF here is AVDE, the Avantis International Equity ETF. AVDE takes the same approach described for AVUS, but this time for developed markets outside the United States. AVDE has an expense ratio of 0.23%. So far, the factor loading on this one doesn't look terribly different from plain old VEA from Vanguard and may not be worth its higher fee. After all, VEA is only 10 basis points. Bogleheads may want to stick with Vanguard funds for simplicity anyway. I plan to keep an eye on these. Rounding out these broad core funds is AVEM, the Avantis Emerging Markets Equity ETF. AVEM applies Avantis' approach to emerging markets. I'm a fan of overweighting emerging markets relative to developed markets in a US-heavy portfolio, as developed markets are highly correlated to the US and thus don't offer as much of a diversification benefit as emerging markets. Here too, though, this fund's factor exposure doesn't look materially different from that of Vanguard's VWO, which costs 10 basis points. That said, these first 3 are arguably good for the novice investor who wants to dip their toes into factor investing. AVEM has the highest expense ratio of the 3 at 0.33%. Next on the list is AVUV, the Avantis US Small Cap Value ETF. Previously, the S&P Small Cap 600 Value Index via IJS VIOV or SLYV was the go-to index to capture US small cap value. AVUV is a very new product, but in its short lifetime, it has achieved slightly better exposure to the value premium and comparatively much more exposure to the profitability factor. I delved into the details of these US small value ETFs here, out of which AVUV seems like the clear winner. AVUV recently replaced VIOV in my own portfolio. In a nutshell, AVUV has been doing a great job so far of capturing small, undervalued stocks with strong financials. I think this one is where Avantis shines. This has not gone unnoticed, as AVUV is Avantis' most popular fund. AVUV's expense ratio is 0.25%, which is worth the superior factor loading in my opinion. AVDV is the international version of AVUV, targeting small cap value stocks in ex-US developed markets. It's called the Avantis International Small Cap Value ETF. The fund has over $500 million in assets and a fee of 0.36%. Next up is AVES, the Avantis Emerging Markets Value ETF. AVES is a newer emerging markets ETF from Avantis for more aggressive factor targeting than the previous AVEM. It has outperformed AVEM in its short lifespan since its launch in late 2021, but costs slightly more at 0.36%. While I questioned whether AVEM is worthwhile over a cheaper plain indiscriminate index fund for emerging markets like VWO, AVES deviates much more and may indeed compensate investors for its greater fee via its vastly superior loadings. AVGE is another newer fund from Avantis that launched in late 2022. It's called the Avantis All Equity Markets ETF. This is a fund of funds, the first from Avantis, to essentially capture the entire global stock market with the addition of light factor tilts. That said, the fund does have some home country bias for the US, with international exposure of only about 30%. Also note that we consider this fund to be more truly actively managed than others on this list in terms of managers' freedom to allocate among different assets within the fund. Because it is a fund of funds, American AVGE investors should get the benefit of pass-through foreign tax credits on some of its holdings, whereas a plain indexed global equities fund like VT from Vanguard is not eligible for one. I covered AVGE in more detail in a separate video here. AVGE has an expense ratio of 0.23%. Next up is AVRE, the Avantis Real Estate ETF. It's worth noting that broad Avantis funds like AVUS exclude REITs, so investors, particularly those focused on income, may want a dedicated REITs fund in their portfolio. AVRE is Avantis' offering for global REITs exposure. The fund has an expense ratio of 0.17%. Last on the list is AVIG, the Avantis Core Fixed Income ETF. Avantis also have a few offerings for fixed income assets, one of which is AVIG, which gets you covered globally with a variety of investment-grade debt obligations from multiple types of issuers. AVIG has an effective intermediate duration of about 7 years and a fee of 0.15%. Thankfully, all these Avantis ETFs should be available at any major broker. What do you think of them? Do you own any, or are you planning on buying any? Let me know in the comments. Thanks for watching. I am long AVUV and AVDV in my own portfolio.